Iran is the third yuan oil seller to be attacked, right? Venezuela was selling oil in yuan, they get attacked. Iran selling oil in yuan, they get attacked. Russia's been selling oil in yuan for a long time. They get a color revolution on their borders in Ukraine. The physical world will ultimately dominate the paper trading world. And we are starting from a much lower standpoint of a lot of the sort of inventories that were run down to manage this thing in the first month or two. But if you just get what everyone's saying we're going to do, which is sort of an economic divorce between China and the U.S., then gold has to soar.
We see nepotism, corruption, and just the feeling that an organized crime ring is running the country. Is there any way out of this aside from a full-on revolution or a total collapse of the system?
It's sort of part and parcel to fourth turnings is faith in institutions collapses.
How would you approach portfolio construction at this moment in time?
I think there's other areas of opportunity. I think
Luke Gromen, great to have you on Commodity Culture. I want to start off with the war in Iran that appears to be rapidly escalating. And before we dive into the implications for the global economy and financial markets, I think it's important to take a step back and ask the question, why do you think this war is happening in the first place? Because we've had so many different takes from Trump is being blackmailed by Israel, or Israel is using AIPAC money to drive the decision-making in the Trump administration, cutting off China from energy flows, the U.S. attempting to establish its dominance as the global hegemony. What are your thoughts on why this conflict is occurring now that we're almost 5 months in and there's no signs of it slowing down?
Yeah, I think the 5 months it's we're kind of getting the goals moving the goalposts, right? Whereas Trump's own words on March 1st was this will be 4 to 6 weeks, and so last week that migrated to Trump's words again. Hey, we've only been here 4 months. We were in Vietnam for 19 years, which is I'm not sure the comparison that you're aiming for. So now that we're getting to 5 months. I think there's elements of all of the above. I would soften taking orders from Israel to taking advice from Israel, which he clearly, I think, takes seriously. And that's, not my speculation. Rubio said that. Multiple different U.S. senators said that Israel had a significant influence in the decision with Trump. Iran is the third yuan oil seller to be attacked, right? Venezuela was selling oil in yuan, they get attacked. Iran selling oil in yuan, they get attacked. Russia's been selling oil in yuan for a long time. They get a color revolution on their borders in Ukraine and attempts to put missiles in Ukraine, which is against their interests. So I think there's something to that dynamic of, hey, there is a defense of dollar hegemony here. I would add that it's not really working. Yuan payments through the CIPS system hit all-time highs in May due to the war. They did 14 trillion yuan, about $2 trillion in yuan-denominated payments alone in May, which is a huge number, particularly when it's largely goods-related. China corporate profits during the war up 20%. China export volumes up 27% in the most recent month. China's shift to EVs resulted in a 1.4 million barrel per day reduction in oil use. So China's making some adjustments. So if the goal was cutting off China, which it very well may be, at least partially, it's not working. So when I sort of boil down, I think my view for the reason for it is there's a blend of number one, Trump getting fooled into thinking that it'd be really easy, like Venezuela. In other words, he made a mistake. Number two, I think there are attempts to slow down China, and there are some things here that could work, things like helium. And I think they were focused on energy, but helium in particular, because it's so important for the semiconductor supply chain. The United States is self-sufficient and the biggest exporter in the world. Qatar is second. And so, and after that, it really drops off. Russia is a big producer as well, but nowhere near the scale of the U.S. and Qatar. So there may have been an element of, hey, let's mess up the Gulf and curtail China's helium supply. Now, China's been working on growing their own supplies for a couple of years now. So that, again, is only going to be a temporary solution if that was part of the goal. And and it's ultimately going to result, like so much else we've done in the last 10 years, it's going to result in China being more self-sufficient, not less. I think part of, number three, I think there is a portion of the U.S. establishment that sees an opportunity to discredit U.S. neocons and reframe slash recalibrate the Israel relationship via what I've termed a let the dog catch a car, right? If you have a dog that won't stop chasing cars, how do you get it to stop? You let it catch a car and you let it deal with the fallout, right? So, what we are now looking at is a potential let the dog catch the car strategy. We're 5 months into a 4-week war, and we're starting from much weaker starting points. So I think from here, the let the dog catch the car strategy could start to become much more obvious in the next, 3 to 6 months. And then I would say the final reason in my mind of all of this is in the same way that cutting off helium to China incents China to become more self-sufficient. This will incentivize the acceleration of domestic reshoring and production as well. So for the U.S. So I think there's a combination of all of those, and I think some of those have been more dominant or prevalent at times over the last 5 months than others. But I think with the benefit of the past 5 months of hindsight, I think those as I'm thinking about it now are how the reasons why I think we're doing what we're doing.
Let's dive into the financial implications on the economy and markets of this conflict. The Strait of Hormuz effectively closed to most vessels. We've seen some try to cross and get attacked by the Iranian regime. Now the Strait of Bab el-Mandeb could also be closed by Iran and the Houthis. We, of course, saw oil initially go into the triple digits earlier in the war. It looks like it could be on its way there again if things continue along their current trajectory. Walk us through how you see this playing out for the global economy and how bad things could get, in your view.
Yeah, when obviously when the war started, we saw a spike in oil. We saw a spike in U.S. yields, which was interesting. Early in the war, there were a lot of people saying oil's not going to go up that much. It did. There were a lot of people saying 10-year Treasury yields in the U.S. would go down. They didn't. They went from 3.95% to 4.65% in about 5 weeks, which is about what we would have thought. The Move Treasury Volatility Index got to near dysfunctional levels, about 118, I believe, on March 27th. And then miraculously, like MacGyver showed up with his bubble gum and duct tape. Somebody came in and sold bond volatility and equity volatility very, very aggressively. Right after that 118 print on the Move in early April. In fact, bond and equity volatility peaked within 12 hours of each other after Trump's April 1st speech, or right around Trump's April 1st speech. Shortly thereafter, Trump paused the war. Markets thought it was all over, and that's where we've been, except it's not all over. And so now I would argue, back to where we were like first week of March, where there's a high level of complacency. A lot of people saying, don't worry, oil's not going to spike because it fell down before, and yields aren't going to spike because, well, I don't know why they think that, because yields are near highs in the U.S. and around the world, everywhere except China. So now we're starting from a point of higher yields, higher oil than we were on March 1st, higher equity prices than we were on March 1st, higher complacency, lower oil inventories, lower commodity inventories worldwide. And so if this persists, I think we get back to sort of the first 4 weeks of this war in terms of markets aren't going to like it. I don't, and there's not much to like, because the physical world will ultimately dominate the paper trading world. And we are starting from a much lower standpoint of a lot of the sort of inventories that were run down to manage this thing in the first month or two. So, for me, it makes me more cautious that this war is reaccelerated.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. And you mentioned that it could be bad news for markets. Now, we've obviously seen massive overvaluation by a number of metrics when it comes to the broad market. I've had a lineup down the block of people on this show for 3+ years saying that we're due for a large correction any time now, and yet it seems to continue to grind higher, driven largely by hope in these big AI tech stocks. Now, interestingly, as you mentioned, as the war has gone on, the market's kind of continued to climb up with a few dips here and there. But nonetheless, it looks like it's on the same trajectory it's been on for some time now, which is to the upper right of the screen. Do you see a protracted conflict as this continues to drag on, ultimately, as you mentioned, being bad news for the market? And in such a scenario, how big of a drop do you think we're looking at here?
I think there's two different sets of dynamics. So I think there's the markets priced in dollars and there's the markets priced in gold. And if you look at the markets priced in dollars, we're at all-time highs. If you look at the markets priced in gold, we're still down about 30% from the highs of late 21, and we're still down I want to say 30 or 40% from January of 2000 in the US. So using gold as a way of saying how much of it is currency debasement versus how much of it's real growth, real productivity. And so with that framework, I think on the equities priced in dollars, I think the shape of the chart is going to be roughly the same. It's going to look like the old Nike symbol on your shoes, right? Which is, I think, and the war may be the catalyst for it. China AI competitive gains may be the catalyst for it. Who knows what the catalyst will be for it. When your valuations are in la la land, which equity valuations are in the U.S. and in a lot of places, the catalyst doesn't really matter. Nothing can go wrong. Nothing is allowed to go wrong. You're not allowed to have any issues, any questions with valuations that are this high on things like the Warren Buffett metric, equity market cap as a percent of GDP, et cetera. And so I think we're going to get, something is going to be a catalyst, and we're going to get sort of a Nike-shaped market where you get a slight drop down, and I don't know what slight is. Maybe it's 10, 15, maybe it's 20%. I doubt it, but could be. And that will cause treasury market disruption, dysfunction, and that will be the catalyst for more dollar liquidity, and that'll send us right back to the highs. And that's been kind of the playbook for the past 5, 6, 7 years. Now, in gold terms, I think if you have an issue, gold probably goes down a bit initially, and we've seen that. And so that I don't have as strong a conviction in that. We've already seen gold well off the highs. And so maybe gold goes down a little bit in that initial risk off in the dollar denominated equity markets. But then ultimately gold soars, and as the decline in equity markets creates dysfunction in treasury markets again, and necessitates more dollar liquidity injected by either Fed or Treasury again, and gold goes back to new all-time highs. And so on a dollar base, I think you get sort of the Nike shape in equities, and then on a gold basis. I think you end up with the chart, more of what we've seen since 2022 and since 2000, really, which is on a gold basis, equities. That's where the correction in equities has been, and where I think it will continue.
Let's talk about gold, because it's been following the same pattern since the war began, selling off as it started. It rises when it looks like peace might be on the table, then falls again when it seems like the war is full on. I've spoken to a few different people about this. Some people say that's normal during a conflict. That's just people looking for liquidity. We saw Turkey sell a large portion of its gold holdings. People speculate that was to purchase energy due to the issues in the Strait of Hormuz. What are your thoughts here on this pattern gold has been following? Because the other side says that, well, in a global conflict of this magnitude, we should see gold's status as a safe haven kick in and prices go much higher. I wonder how you're reading the situation.
Yeah, I think that's exactly what we've seen, which is there's been some reserve selling for energy, for liquidity. No question about that. There's been selling of, alongside treasury bonds as well, for reserve selling slash liquidity. Uh, and I also agree with the point that if you get into a global, a real, not just because I don't think we're going to get a world war per se. It's possible, but I don't think that's what we're going to get. Uh, but if you just get what everyone's saying we're going to do, which is sort of an economic divorce between China and the US, then gold has to soar because China's not going to use the yuan and run deficits in yuan, even if they could. But they're not going to. They have set up um, offshore yuan clearing banks in every major gold hub in the world. So London, Switzerland, Dubai, Singapore, Hong Kong, and of course Shanghai, where if you end up running surpluses against the Chinese or you have excess yuan by virtue of trade with the Chinese, you can recycle those yuan surpluses into gold at any of those places. And that's how China's going to internationalize the yuan. They've been very clear about this for 10 or 15 years, and the West just continues to generally ignore this because they don't want to hear it because they don't have a trump card for it. So to the extent this war continues doing what it's doing, I think it is initially negative for gold, but I think gold will um, bottom, and I think it's a really important relationship to watch, right? Because exactly what you just said is what everybody's watching for, which is okay, war on, gold down, war off, gold up, and I get that initially, but the longer it goes on, there is a day coming where we're going to say war on, gold up. And that's a really important day because that will be the day where people go, okay, fine. This is going to last for a while. I need to do some of my business in yuan. I need to do some of my business in dollars. All the business I do in yuan, I'm going to be buying gold for and shifting any surpluses in yuan that I earn into gold. And that will be a really big moment. And I think that is ultimately how this war ends up. It ends up backfiring on the U.S. in terms of if part of this was done to enforce dollar hegemony, all it's going to do in the long run is accelerate its end.
And are you watching the silver market here as well? Do you ascribe to the view that silver is basically just a junior version of gold? Or do you think its industrial and strategic attributes put it in a separate category? Because obviously we saw the massive rise into triple digits at the start of the year. Silver moved very far, very fast. It's now come off of those highs greatly. So I'm wondering how you see that market unfolding and how you view silver versus gold.
Yeah, I do watch it a little bit. I'm not totally as deep in it as I am in the gold market. And I have a small position of silver. I bought probably $18, maybe, I don't know, 8, 10 years ago. I do think silver is wildly mispriced as an industrial metal today. And I also think it is an Achilles heel of sorts of the credit gold and credit silver system that does support the post 1971 dollar system. So it does have monetary elements. And when I mean credit gold, I mean the unallocated silver and gold derivatives that basically when demand kicks up for something, there's two ways you can address it. And in particular, when there's demand for gold and silver that picks up, there's two ways you can address it. You can allow the price to rise and physical to move, or you can allow unallocated derivatives to expand and address that supply and let price stay still. And generally speaking, over the last 50 years, the latter has been how increases in demand for gold and silver have been addressed. I think physical holders of silver will be rewarded over time just because, again, when you look around at everything we're trying to do, we're trying to build redundancies to the industrial base that China has built around the world, us, Japan, Korea. Maybe the Europeans will really finally get their act together in certain energy stuff too. Who knows? But the point is that all of that stuff can't get built with paper silver. It's got to get built. There's silver is just used in so many different places, especially as it relates to anything EV slash electric, solar panels, etc. So I think physical holders of silver will be rewarded over time, but I don't know if over time is 2 months, 2 years, 2 decades. I would guess it's probably within 2 years, but I don't have a strong feeling on that.
There's a lot of hyperbole about the end of the fiat currency system coming up ahead. A lot of people have talked about it on this show. It does feel like we could be reaching a breaking point of some sort as the debt and deficits become completely untenable around the world. The cost of living crisis is accelerating. I hear all sorts of opinions from, we can keep kicking this can down the road far longer than people realize, to the US dollar is going to hyperinflate at some point in the near future. We'll be forced back onto a gold standard. And of course, everything in between. I'm wondering what your take is on the potential end of the fiat currency system and the return of gold to the monetary system. Does one have to happen for the other to happen, or could fiat currency still maintain its status as a monetary asset and gold be reintroduced into the monetary system in some form or another alongside it?
It's a great point that you just made there, because people like to make it black and white and be very hyperbolic about it, but like most things in this life, it's shades of gray. So, uh, gold has begun its return into the system as a neutral reserve asset. We're at least 12 years into that shift, at least, and you can see that. You look at global FX reserves. Dollar reserves have not really moved in 12 years. Treasury bond reserves have been flat for 12 years, and gold reserves have risen meaningfully. So central banks have been growing holdings of gold and not growing holdings of treasuries, while treasury supplies have been growing exponentially for at least 12 years. So this is already 12 years underway. And I've been very clear that I think the post 1971 structure of the dollar system is ending, but the dollar's not ending, and I don't think it will in my lifetime, or really even my kids or grandkids, not that I even have grandkids' lifetimes. Uh, it's changing. It's changing to a neutral reserve asset, gold, that floats in all currencies. And everybody wants this. The PBOC came out in 2009 and said we want to move to a non-credit based, commodity related, non or currency issued not by any single country. It's gold. And then they started buying gold a few years later, much more aggressively. And you can see declassified documents about from U.S. State Department that China's buying gold because they see it as a way to kill two birds with one stone and build their own resilience. The IMF came out in 2011, said we should think about moving away from dollar monopoly of oil and instead move it to something like an IMF SDR, and price gold and oil in IMF SDRs, not dollars. Say think what you will of it. The Dominic Strauss-Kahn, who was in charge of the IMF when that was proposed, ran into a sex scandal and was removed from office 3 months later. Moving on, World Bank, former Treasury official Robert Zoellick, 2010. We need to move to a system where you have the goal, or excuse me, of euro, yuan, or euro, yen, pound, and dollar, and a yuan that starts to open up its capital account. And we should also use gold as a reference point for inflation expectations, growth, etc. And then most recently, and perhaps most importantly, because we are the incumbent in control of the past system, the U.S. has been talking about Hamiltonian economics. Besant gave a speech at the New York Economic Club 4 weeks ago. He, same day, posted a Wall Street Journal op-ed on the same topic, that Hamiltonian economics back Trump's economic statecraft. The Hamiltonian economics theme echoes what U.S. Trade Representative Jamieson Greer said in January at Davos, saying we're done with the old system. The United States is moving to a Hamiltonian economic system. Vance and Trump have alluded to it as well. And so the key here is that you can't do a Hamiltonian economic system with the post 1971 structure of the dollar. You just can't, full stop. Because Hamiltonian economics is we're going to put up tariffs and we are going to implement industrial policy. And when you do those things, you don't emit the dollars needed for the system to run. So the world goes to gold. So to me, what Besant said, I mean, 4 weeks ago, everyone on Wall Street virtually is like, Besant is the adult in the room, et cetera, et cetera, et cetera. Besant's telling you the gold's coming back in the system. That's what he's telling us. When he says Hamiltonian economics are backing our Trump's economic statecraft, that's what's happening here. So now, what does that imply? That implies much higher gold prices. That implies a much lower trade value of the dollar against the creditor currencies like the yuan, the yen, to a lesser extent the euro. And that would be a system that would lead to perhaps the greatest economic boom worldwide uh, since the end of World War II.
At the moment, it really does feel like the political class in the US is in a loot the system mode. We're seeing blatant insider trading, or at least what appears to be allegedly. Um, we saw the president launch his crypto scam shortly after taking office. There's nothing else you can call it, in my opinion. And then he had his wife launch her own scam, and they rug pulled everybody, which is completely insane to me that that's kind of a footnote right now. We've got these new Trump-based financial products. We see nepotism, corruption, and just the feeling that an organized crime ring is running the country. And I have to note this is on both sides of the political aisle. I'm only mentioning the Trump administration because they're the ones currently in power. I don't think the Democrats are any better. But is this all standard for an empire in decline, in your view? Is there any way out of this aside from a full-on revolution or a total collapse of the system?
Yeah, I mean, it does feel that way at times. And I think it's part of the long cycle, right? Everybody wants to talk about the fourth turning, and we're heading into a fourth turning, and then, it's sort of part and parcel to fourth turnings is faith in institutions, collapses, and what people tend to leave out is why does faith in institutions collapse as well? Because you get stuff like this, and I agree with you. It's both sides of the aisle, and it's been frustrating as an American to watch. Now, I would say it's encouraging. The U.S. has been designed to survive being run through periods like this, and I'm hoping that will continue to be the case. But I think part of it, but is a recognition by elites of this sort of get yours while you can mentality that has really been enforced by events of the past 30 years, and in particular, let's call it 25 years. Iraq War II, the GFC bailouts, and then COVID, where a lot of people made a lot of money on shady, if not illegal, actions, and there were no repercussions. And so, if you can get rich and there's no repercussions, guess what you're going to get? You're going to get a lot more illegal actions, and that's what we've seen. So I think it's what's Charlie? What did Charlie Munger always say? You show me an incentive, I'll show you the outcome. If you get a bunch of, a small number of people getting rich on illegal actions and no repercussions, then you're going to get more people doing more illegal stuff and shady actions, and they're going to push it as far as they can go until, look, I think ultimately, I don't know if you get full on revolution or total collapse. That's not where I think it'll go. I think I think we're getting the warning signs of our system as it's been designed to function, right? When you get a Mamdani, a professed socialist, borderline Marxist, in charge of the center of capitalism in New York City, that's a warning. When you get Charlie Kirks of the world getting shot, that's a warning. Charlie Kirk was just having a conversation. When you get, the Brian Thompsons of the world, the former head of United Healthcare, president of United Healthcare, gets assassinated on the streets of Manhattan. These are warning signals. And when you read about these periods in time, somebody who studied this a lot is Peter Turchin, and he said there's two things to watch for. It's wealth inequality and elite overproduction is what he calls it. When you've got more elites than you know what to do with, and then when you have wealth inequality then you get these really extreme tail outcomes in terms of political outcomes. And what I'll say about all this sort of corruption and shadiness and some of that outright illegality is this is where we're heading. And and what Turchin says is it's the United States, as he measures it, is at the highest levels of the combination of wealth inequality and elite overproduction that we have seen as a country since the late 1850s. And of course, from 1861 through 65, the United States fought the Civil War. And it's fascinating because I'm reading a book now by Eric Larson, a new book of his called, something Demons. Unleashing the Demons or something like that, about sort of the 3 or 4 or 6 month run up to the Civil War getting kicked off in Charleston Bay. There's a lot of stuff that's rhyming. So, look, I hope we can avoid that kind of an outcome, but history would tell you, and sort of the people studying the history would tell you that, we're not on a good path right now. And we're not seeing a lot of people um, from either side of the aisle making a real attempt to step up and stop it. And by the way, there are a few that are trying and they are getting thrown out of office.
You've spoken before about the debt doom loop that the US finds itself in. How does this debt and deficits, not to mention the entitlement spending, ever get resolved? Because obviously, this is a debt that's essentially by design not going to ever be paid off. Is there some way that they can sweep this under the rug? We've heard all sorts of theories from they'll introduce a central bank digital currency and somehow they'll be able to manipulate the numbers and get things working in their favor again under a new financial system. They'll just keep inflating the debt away. They're in an inflate or die situation. But you've pointed out, as of many other people on this show, that there's really no way out of this issue for the United States government at present. How do you see things as they currently stand today when it comes to debt and deficits? And how do you see it playing out? Can this can keep getting kicked down the road indefinitely?
There appears to be a game. So ultimately, it's just a currency issue, right? If the currency weakens enough, and in particular against gold, the U.S. can pay off its debt overnight, right? At whatever, I don't know what the number is. It's probably 20, 30. Well, it's a lot more than 20,000 an ounce, but some big number per ounce of gold. U.S. can, the Treasury Secretary can instruct the Fed to revalue the gold. Boom, we pay it all off with devalued dollars, and debt holders lose, and the government wins, right? So that it can always be it can always be dealt with. It can always be floated. It's a political question. When does the sort of, the preferred game plan for 40, 50 years has been slow financial repression, right? So, the debt grows 8% and 8% CAGR since 2008. We say inflation is 3 and we pay 0 to 2% on the rates and we try to earn our way out of it. And that is the preferred way of doing it. The problem is that was supposed you have to have some level of austerity on the back end. If you just keep spending 8% more money every year, you're never going to catch up. The other problem with that is you had a finite time horizon for that, because ultimately one of the great lies has been, the entitlements are not debt. And they're not technically until they go from off balance sheet to on balance sheet. And them going on balance sheet is just a function of uh, boomers turning 65. And 70 million boomers were born from 46 to 64. Stands to reason most of them are going to reach age 65. This is not a surprise. And so they have, and those, so that's the reason why the debt growth hasn't slowed down, is because the off balance sheet liabilities came on balance sheet. So really, it's just a political question. The preferred method is just financially repressed, but then you can do that until the politics start to get weird. And that ties back to my prior point. We're now years into the politics getting weird. If financial repression wasn't happening, Donald Trump never gets elected. If financial repression wasn't happening, Obama probably doesn't get elected. And if this isn't Trump, what I would mark as the first, like, okay, we have a political issue. The financial repression playbook is beginning to drive political issues. That was kind of the starting point of that. And the acceleration of that are things like Charlie Kirk's assassination and the reaction to COVID and Brian Thompson's assassination and Trump's reelection. All of these things are warning people that the slow financial repression isn't going to work. And so now the playbook appears to be, as you look around the world, look what everyone's doing. Everyone is basically doing defense spending stimmy. The Americans, the Germans are like, wait, so we want this in writing. You want us to build a bunch of weapons and point them at Poland, right? Point them eastward at Russia. We have your permission. We want that in writing. The Japanese are doing it. The Brits are doing it, right? So everyone's borrowing money they don't have and increasing defense spending meaningfully, which starts to just look like debt-fueled stimmy of COVID. And the hope perhaps being that, hey, if we do it all together, no one will notice that all our currencies are dropping at the same time. So the dollar will be stable, the pound will be stable, the yen will be stable, the euro will be stable against each other, but their bond markets will sell off. Check. The inflation will pick up. Check. And now you're just, basically the bet is that this will earn our way out of debt before we have to start printing money to cap bond yields. I think it's a bad bet. I think they're going to print money to cap bond yields at some point in some form. That can be via regulatory action or other things. Uh, but that then gets us right back to my initial point, which is ultimately it's just devalue the currency. That's all. And against what? Against gold.
How do you see China's role playing out in all of this? You spoke earlier about the CIPS yuan-based payment system. It launched in 2015. You mentioned it hit all-time highs in terms of payments processed in May of this year, which I did not know. We hear a lot of different opinions on China because obviously they have a real focus on gold, and they seem to understand it more as a monetary asset than the West. We're seeing these export restrictions come on for rare earths and other critical minerals. You've got people like Peter Zeihan, who's predicting indefinitely that China is going to collapse any day now. Many point to their real estate issues, demographic issues as proof that despite appearances on the surface, they are actually in dire straits. And then on the other side, we see all of this technological progress and innovation. BYD, obviously the top EV company in the world. Their robotics are apparently very advanced. So there seems to be two distinct camps when it comes to China. Is this another situation of shades of gray, like you mentioned earlier?
Yeah, I think it is. I think it is. The investors like to quote Warren Buffett, at least US investors like to quote Warren Buffett and say it's been a bad idea to bet against America for 250 years. And I agree. Um, it's funny, though, a lot of these investors are generally seemingly not self aware enough to realize that in 1850, it had been a bad idea to bet against China for like 1500 years. And yet, China did enough dumb things to have a century of humiliation from 1850 or 1860 through 1960, 1980, really. So, America, has a housing affordability crisis. We talked about China has a housing pricing crisis, right? That housing's getting too cheap. Um, Neither one's really an ideal outcome. America's affordability crisis is pushing youth towards Marxism. We're seeing that. Um, China's is, in theory, should incent young people to get married more and have more kids. If you can afford a house, you have a family. If you can't, you don't. Which is the smarter move long term for political stability? I would say, is the smarter move for political stability to let home prices be affordable and let gold rise in yuan and let stocks rise in yuan? Or is a smarter move politically to let your old people outbid young people out of shelter and not let gold rise to maintain the hegemony of the dollar and let stocks rise? I would argue in the short run, the latter is smarter. In the long run, the former is smarter. I think China's doing the smarter thing in the long run, in the short run. And the problem is we're running out of the short run, right? Because Mamdani's getting elected, and Bill Maher's openly talking about how disturbing the shift of the youth to the left is towards Marxism. And Maher's been pretty lefty. So the regarding Zion and his demographics points, you know, he's been harping on this for years, and I think he's wrong. I mean, to me, demographics are very conditional. You tell me what AI and robotics are going to do, and I'll tell you how the demographics alarm he's been raising for years, works out. Look, if AI and robotics do what are discounted into the AI and robotics stocks in Western markets, then nations that have a growing heterogeneous population, like the United States, to a lesser extent, like the UK and EU, they are going to be more politically unstable than nations with falling, homogenous, aging populations like China, Japan, Korea. If AI and robotics do what everyone thinks they're going to do, Asia is going to be a lot more politically stable, in my opinion, than the US, EU, UK, and the broader West. So, that's to me, that to me is how I think about it. And we're in a competition, and look, you'll never bet against America. I agree. And how many times do we need to see China outperform expectations? Oh, China 2025, back in 2015, they'll never do anything. Well, here we are. Oh God, we need to do something. China 2025 is really good. Oh, the Chinese will never be able to compete with the large language models, not till mid to late 27. Oh my God, they're doing it now. Like it's a fascinating cognitive distance. Like you would think after like the sixth time of shorting the Chinese ability to compete, they would learn the lesson, but nope, they just double right down. So, we'll see.
Given everything we've discussed today, how would you approach portfolio construction at this moment in time? Where are you seeing opportunity as an investor? Are there areas of the market you would be avoiding? And would you have more dry powder on the sidelines than would normally be the case, given what many are seeing as a huge overvaluation in the broad market? And of course, if that takes a hit, as you mentioned, we could see gold and potentially other quality businesses take a hit in the aftermath as well.
Yeah, it always depends on events. For me, we are absolutely in la la land on equities in the US, on the equity markets. And I use that, the Warren Buffett metric, which is total equity market cap divided by GDP. We're a super la la land. But I've always used it, Warren Buffett metric adjusted for US federal debt, because my view has been, and it's been validated, that the US will always print money and buy the debt. They'll always monetize the debt if they need to. And so you need to subtract that out of the equity valuation. And that's kept me out of trouble. In 2018, the Warren Buffett metric was back to January 2000 highs, and a lot of people said, "Oh, get out of equities." I said, "No, no, no. It's got at least another 60% upside until it hits January 2000 levels when you adjust it for the federal debt." And humbly, I was right. But now, when you adjust for federal debt, we are beyond where we were in January 2000. So we are in complete la la land, and that's fine. Valuation doesn't matter until fundamentals change. And when your valuations are in la la land, you can have no issues. They can't even be little issues. And we've got big issues. We've got a war that's restarting that's going to boost oil. We've got Chinese competition we didn't think we were going to have in the bubble assets. And so, yeah, I think we could see a early 2000s type period where industrials and commodities, they actually, they initially sold off with tech, but then they bottomed way sooner and did great, while tech suffered for a decade as those valuations were normalized. Gold did great. Gold miners did great. I think there's other areas of opportunity. I think I still love electrical infrastructure in the U.S. I think Japan is likely to set to continue benefiting because if we're moving away from China, or at least trying, most of what the U.S. says they want to reshore, the U.S. can't reshore, not without China, not without somebody, not some foreigner's help, and that foreigner is Japan, to a lesser extent Korea. Korea is a bit of a weird market now, just given it's like three stocks and they're trading like Dogecoin. So, and to your point, or to your question, I think having high cash and T-bills is very wise. I've got 20 to 22% of my liquid net worth in cash and T-bills. And I have for pretty much, not pretty much, for this entire year. Because coming into the year, I didn't like the setup. And I didn't like the setup during the war. I still don't love the setup of risk relative to reward. I've got a high level of gold, and I have a high level electrical infrastructure equities. And so those are where I see interesting opportunities.
Tell us about Forest for the Trees and anywhere else people who want to follow your work can go online.
Yeah, thank you. If you're interested in hearing more about our institutional and mass market products, fftt-llc.com, and you can find me on X at Luke Gromen, LUKEGROMEN.
Great. Those will be in the description below. Luke, fantastic conversation. Thank you so much for sharing your insights today.
Thanks for having me on, Jesse. It was great being here.
Thank you for joining us today. This episode is brought to you by ARK Silver Gold Osmium. They have some great prices on gold and silver bullion products. You can see some of them on your screen right now. These are subject to change and while supplies last. So reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arksgo.com. And make sure to tell him that Commodity Culture sent you, and subscribe to the free Commodity Culture newsletter, readplaza.com/commodity culture. I break down interviews like this and provide my own actionable investment insights based on the conversations. Get it in your inbox Use the link in the description below, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.